If you run a construction business in the UK and you've closed a job thinking that you made a 20% gross margin, only months later to realize that you actually made 8% or worse, you've lost money, then this video is for you. I'm Ahmed Kayoum, a finance director for construction firms and founder of Blue Water Accountants. Now, my team and I help construction business owners get full visibility on their numbers so you actually know which jobs are making money, which ones are bleeding cash, and so you can fix it before it's too late. Over the years, we worked with many construction and trades businesses turning over anywhere from $500,000 to around $15 million a year, and the same issues keep cropping up. No one's tracking work in progress properly. Take Athena Commercial Interiors, for example, a client of ours. When they first came to us, they were a startup. They had no finance system, no structure, just 2 directors and a small team of subbies winning work and trying to keep up. So we built everything for them from day one: their finance systems, reporting, WIP tracking, and in the first year, they did £4.7 million in turnover. That visibility gave them the confidence to grow 20% in year 2, and they did it profitably. And now they're on track in year 3 to triple their revenue. So in this video, I'm going to break down what WIP reporting actually is in plain English, why it's so critical for construction businesses, and how you can use it to protect your margins whilst you can do something about it. Alright, so let's talk about why this happens. Why jobs that look profitable end up losing money. Now, you've probably already been there. You quote a job with a solid margin, 15, maybe 20% built in. The project's busy, the teams are on site, work's getting done, the client's happy, and everything looks good. Then a few months later, once all the invoices have landed, you finally look at the numbers, and the margin turns out to be 8%, maybe 5%, or worse, you actually lost money. And you're sat there thinking, what happened here? Where did all the profit go? Here's why it happens, and honestly, it's so common in construction. Revenue and costs hit your accounts at different times. So let's say you do 50 grand worth of work in March. You won't bill that until April once the stage is completed and the valuation has been signed off. But all your material costs, labor, plant hire, all of that hits in March. So if you're just looking at your accounts or your management reports, it looks like you're spending loads in March but barely making anything. Then April, that looks amazing because the income comes in, but all of the costs have landed in the month before, right? And by the time you finally see the full picture, the job's finished and you can't change anything about it. That's the painful bit. It's not that you're bad at what you do, you're clearly good at it, it's just a visibility problem. Because what happens is hidden losses quietly eat away at your profit. You start making decisions about which jobs to take and how to price them based on information that isn't even accurate. And when the business grows, the problem just multiplies. More projects, more moving parts, and the blind spots just get bigger. Then year end comes around and your accountant shows you the final numbers, and you're like, if I had known this 6 months ago, I could have done something about this. So look, this is not a work quality issue, it's a visibility issue. And the reason why most accountants don't catch this is because they're looking at your books in isolation. They don't realize how the timing of revenue and costs in construction completely skew the picture. And that's exactly why proper WIP reporting comes in. So what exactly is WIP reporting? Well, WIP just stands for work in progress. It sounds like accountant's jargon, but it's actually quite simple once you get it. All it means is tracking the financial position of the jobs that aren't yet finished so that you can see where you stand whilst the job is still running. In other words, it shows you in real time whether your ongoing projects are making money or losing money. Now, most industries don't need this, but construction does. And here's why. Construction is project-based. Jobs run for months, sometimes longer, and your revenue and costs rarely line up neatly with each calendar month. So you might be working on a 6-month job, materials, labor, and hire costs are all going out every single month, but you might not bill the full amount until way down the line. So if you're only looking at what's been invoiced, your accounts are basically lying to you. Standard accounting doesn't show the true picture until it's far too late to do anything about it. That's where WIP comes in. Good WIP reporting should show you how much work you've actually completed on each project, how much you've built so far, what your actual costs are to date, whether each job is currently profitable or losing money, and what your projected margin looks like if things keep going the same way. And here's the real value: visibility. With proper WIP reporting, you can spot issues whilst there's still time to course correct. You're not waiting for year-end accounts to tell you what went wrong 6 months ago. You can spot problems early. Maybe a variation hasn't been billed, maybe labor costs are running high, maybe the pricing's too tight, and you can fix it whilst the job is still live. That's the power of WIP. It puts you back in control of your numbers in real time, not after the job has been done. Okay, so let's break this down into something really practical. There are 3 key numbers your WIP report should be showing you. Number 1, it should show you the value of the work done. This is simply how much work you've actually completed so far. It's based on the physical progress of the job, how far through you are. For example, if you've got a 100 grand project and you're 60% complete, that means you've done 60 grand worth of work. That's what you've earned even if you haven't billed it yet. Number 2, it's the value of work billed. This is what you've actually invoiced the client for. Now in construction, this usually lags behind the work done. You often complete stages before billing for them. So using the same example, if you have a 100 grand job and it's 60% complete, but you've only billed 40 grand so far, that means you've got a 20 grand gap. The gap is your unbilled revenue, work you've done but haven't yet invoiced. Number 3, it's the cost incurred to date. This is what you've spent on the job so far. So for materials, labor, plant hire, subcontractors, everything. So let's say you're 60% complete. Your cost should be around 48 grand if you're working on a 20% margin. But if they're already at 55 grand, then that means you're overrunning and eating into your margin before the job's even finished. Now here's how these 3 numbers work together. The value of work done minus the cost to date gives you your current profit or loss position. Compare that to your expected margin and you can instantly see whether you're on track or whether you're slipping. And look, you'll also spot problems early on. Maybe costs are running high, maybe variations haven't been billed for, maybe your pricing's too tight. And that last piece, unbilled revenue. That's money you've earned but haven't yet invoiced. It's cash that's technically tied up in the job. So knowing that number helps you manage both your margins and your cash flow. Now if you're sitting there thinking, yep, this all makes sense, but I've got no idea if my accountant's actually doing this properly or not, then you're not alone. Most construction business owners don't have proper WIP reporting, even when their accountant says they do. So look, I've put together a quick construction finance health check. It takes about 3 minutes to complete, and one of the things that it checks is whether you've actually got proper job profitability tracking in place or not. There's a link in the description below, grab it if you want. But here's a key thing I want you to take away. WIP reporting isn't just some nice looking report your accountant emails you once a month. It's a working tool you should be using to make real decisions. Decisions like, should you push harder on variations? Which jobs are worth prioritizing? Are you actually pricing tight enough, or are you leaving money on the table? And that's the difference between having WIP reports and actually using them to protect your margins. So let's talk about how to actually use WIP reporting to protect your margins, not just for the sake of it. First, spotting problems early. This is where WIP reporting really earns its keep. Scenario 1, costs are overrunning. If your costs are higher than they should be for the stage that you're at, that's a red flag. Dig into it straight away. What's driving it? Is it plant hire? Is it materials? Is it labor? Catching it early means you can make adjustments before it turns into a loss. Scenario 2, unbilled work piling up. If your work done is miles ahead of what's been billed, your cash flow is going to suffer. So you're basically funding the job for your client. That's your cue to bill more frequently and get your valuations in more quickly, or renegotiate your payment terms. Scenario 3, variations not captured. This one's huge. The client asks for changes, you crack on with the extra work, but you don't stop to price it properly or get the extra costs agreed. So you're funding the variations out of your own profit. And when you've got WIP reporting data in front of you, it's easy to see when that's happening and when to get it sorted quickly. Now, beyond spotting problems, WIP also helps you make better pricing decisions for future jobs, because it shows you your true margins on completed work. No more guessing based on what you think you made, you're pricing based on facts. And honestly, most construction firms discover they may have been underpricing by 10, maybe 15% for years without realizing it. Then there's resource allocation. Once you know which jobs are genuinely profitable, you can focus your best people and efforts there. And if a job's losing money, you can decide whether to scale back, fix it, or renegotiate before it becomes a bigger problem. WIP gives you the data to make those calls confidently instead of just going on gut feel. And finally, client variation conversations. This is where WIP helps you stay in control and look professional. It means when you're in progress meetings or client discussions, you can say, we're 60% complete, here's where the costs are, and here's what we need to review. You're not arguing months later when the job's finished. You're having real-time data-backed conversations conversations as the work happens, and that builds trust because clients and project teams can see you're managing both the project and your business properly. Alright, so if you're thinking this all sounds great, but how do I actually get WIP reporting working properly? Then here's what you need. First, you need a proper job costing system. Every single cost, materials, labor, plant hire, subbies has to be allocated to the right job. If costs are all lumped together, you'll never get accurate WIP data. Second, you need accurate tracking of work completed. That means knowing the stage of completion on each project, not guessing, but actually measuring it properly. Third, you need regular updates, at least monthly, but weekly is even better if you're running large or fast moving projects. And finally, you need someone who understands construction to interpret the data, not just produce the numbers. Because reading a WIP report without understanding the projects behind it is like looking at a map without knowing how to drive. Now here's where most people get it wrong, and honestly I see these mistakes all the time. Number one, they treat construction like any other business. It's not. The timing, the payments, the retention, none of it fits neatly in a monthly pattern. Number two, only updating WIP once a year or just at year end. That defeats the whole purpose. You're basically driving with your eyes closed and only checking where you are when you've actually hit the wall. Number three, it's not allocating costs properly to jobs. Messy data means worthless WIP. Simple as that. Number four, it's guessing the stage of completion instead of actually measuring it. If you're just estimating, you're giving yourself a false sense of security. And finally, number five, having the report but never using it. If it just sits in your inbox, it's not helping you make decisions. Now here's why most accountants don't do this properly. Generic accountants treat construction like any other business. They'll do your accounts and send you your reports, but they don't understand the timing gap between work done and invoices raised. And that's exactly where profits slip away. They're compliance focused, they produce the numbers, but they don't help you to actually use them to make decisions. Look, at Blue Water, this is what we do. WIP reporting is built into our 60-day financial framework. It's part of step 3, which is visibility. It only works if the foundations are there and proper job costing, cash flow systems, and clean data are there. It's not a standalone report, it's part of a complete system that gives you control of your numbers. And that's exactly why we only work with construction firms, because we actually understand what you need and how you operate. Right, so now you understand what WIP reporting actually is. It's real-time insight into job profitability while you can still do something about it. It tracks 3 key numbers: work done, work billed, and costs incurred to date. And when you use it properly, it helps you spot problems early, price jobs accurately, and allocate your resources intelligently. But here's the reality. If your current accountant isn't providing this, or if you're getting WIP reports but don't really know how to use them, then you're still operating blind. And every month you run your business without that visibility, you're potentially funding jobs that are losing money even without realizing it. That's exactly why I created the Construction Finance Health Check. It's free, it takes about 3 minutes, and it will show you whether you've got proper job profitability systems in place, among other systems. You'll get an instant report showing where your finance function is strong and where it's quietly costing you money. The link's in the description. I'd recommend that you take the assessment now, and if you complete it and you're ready to implement the proper WIP reporting system along with the full financial control system, I'll personally review your results with you on a free 30-minute call. We'll look at your specific setup and I'll tell you exactly what needs fixing first. Your business should be making the margins that you think you're making, get the visibility, protect the profits, and stop leaving money on the table. And if this was helpful, hit subscribe. I've got more construction finance content coming to help you move from chaos to control. Thanks for watching. I'll see you in the next one, and don't forget to complete the finance health check.